Welcome back to Ferocious Education. This is Ed. Today, another update for CCIV, and I'm going to go through two things: their forecasted revenue coming up, as well as the date or potential date of closing onto this one. So watch it to the end. Let's jump right into this one. So, CCIV, a lot of people have been hearing about this one. I've covered it even when it was on the rumors phase, and we have it confirmed as Lucid Air, going on to be a new ticker on its own in a reverse merger in the SPAC. And so this was definitely a surprise, a good surprise it is, and we can move on to some of the things that we need to look at before we can move on forward in terms of the valuations. Starting off here with the leading charging speeds, Lucid Grand Touring or Dream Edition itself has 20 minutes charging time for 300 miles, compared to a Tesla Model S long range, which is 15 minutes for 200 miles, similar to the Tesla Model S Plaid and Plaid Plus, and you got also the Porsche Taycan Turbo S, that's 22.5 minutes for 160 miles. So with this one here, there's something that is special about it, is something called two-way charging, which is an in-house Wonderbox boost charge technologies that works over 900 voltage and system, 300 kilowatts DC fast charge capable, and with an Electrify America partnerships, expected to be the first bidirectional system on the market. So this is definitely something that is bullish, and another thing here to keep in mind is that it has 32 sensors on board. The Lucid Air is expected to launch with the most comprehensive sensor suite in the market. Lucid Air is planned to launch level 2 autonomous driving functionality and be capable of software upgrades over the air, and by collecting and analyzing fleet data, Lucid can be continuously enhanced in terms of the autonomous driving feature. And as a civil engineer, I've had a good amount of exposure in terms of transportational engineer. And level 2 autonomous vehicles, because a lot of people hear autonomous vehicles, they all automatically think level 5, which is full automation. However, let's go with level 0. No automation. There's no automations there. It's a normal car. Automation number 1 is driver assistance, which is vehicles controlled by the driver but some assist features such as lanes, etc. 2. Partial automations. So the vehicle has combined automated functions like accelerated and steering, but the driver must remain engaged with driving tasks and monitor the environment at all times. So I think part 2 is actually what Tesla has right now. Conditional automation. Driver is a necessity, but is not required to monitor the environment. The driver must be ready to take controls of the vehicles at all times. That is the next step in AI. Level 3, especially to level 4. Level 4 is high automation. The vehicle is capable of performing all driving functions under certain conditions. The driver may have options to control the vehicle. And level 5 is the vehicle is capable of performing all driving functions under the conditions, and the driver may have the option to control the vehicle. So that gives you an idea when they're talking about autonomous level 2, especially even for other EVs if you've never heard about this one before. This is a summary on what the levels of autonomy is in AIs and autonomous vehicles. So luxury vehicle market opportunity. So between 2018 and 2026, they're estimating a 5% CAGR. Meanwhile, that CAGR is quite modest, but it's actually in terms of the market itself and not their own CAGR. So that's something to keep in mind, because it's going to go from potentially $496 billion to $733 billion from 2018 to 2026. Now, this is based on Allied Market Research 2020 and Canalys 2021 company. And so we get to see that at the current moment, the 2021 products including Lucid Airs, which is 1.7 million units TAM. And of course, you're looking at perhaps 15 million units by 2030 TAM, including all these different products. So I'm really interested to see a bit more about Lucid Gravity, because this looks like something might be interesting, especially with a lot of rumors as well with the Apple Car and the potential partnership with something like Lucid Airs. And so in terms of total revenue, I needed to go through this one here because this is actually quite important, especially for the next slides onwards. The annual total deliveries in thousands for the Air SOP, you're estimating in 2022, you're looking at 20,000. In 2023, you're looking at somewhere around 49,000. 2024, 90,000. 2025, 135,000. And then it kicks up in 2026. Now, in terms of the total revenue, though, we're seeing initially 2.2 million, or actually this is in millions, 2.2 billion, 5.5 billion, 9.9 billion, almost 14 billion between 2022 and 2025 respectively. And so another thing here you need to consider, North America Lucid Air deliveries expected in the second half of 2021, and EMA and China deliveries are expected to begin in 2022 and 2023. Remember, Tesla has a lot of sales coming in from China. There's a lot of demand in China, and the competition there is a little bit fierce, with Tesla, NIO, and other companies trying to grab a bit of the pie there. And so that's something to consider. Now, in terms of profitability, this is actually quite important because even Tesla is technically not really profitable from the cars they sell. And even if they were on the sheets somewhat profitable, it definitely wasn't before 2020. And so taking a quick look in terms of EBITDA, you're looking like they are aiming for net positive by 2024, which is 3 years from now. That is massive because a company like this one here that is going from the ground up with so much funding, it has potential to reach net profitability by 2024, but the free cash flow would be positive by 2025, and that would be something very, very bullish. And at that time, you can start considering them to be one of the major, bigger, well-established companies in terms of the vehicle market. Now, other things to take a quick look at. So pro forma ownership, and I believe this one is actually sitting at $10 per share, and you're looking into a whole lot pro forma outstanding shares around $1.6 billion. That's around 2 billion Churchill Capital IV cash and trust and 2.5 billion in PIPE. The transaction is expected to close around Q2. The company expected to have 4.5 billion plus existing cash to substantially fund through the committed programs. Now, of course, this one here has some uses. First off, cash to balance sheets, that's going 27%. Cash going to existing Lucid shareholders, that's 72%. So that's definitely a lot of money going to existing Lucid shareholders, coming in around $11.75 billion. That is quite some amount there. You get to see that the comparisons between their 2022 EV revenue compared to something like Tesla's, FSR, NIO, etc. and 2023 estimated EV over revenue, you get to see that the intrinsic value of something like Tesla and NIO are multiple times more than Lucid Motors. So that's something to keep in mind. And now we can go on towards when that date or when that merger is going to most likely occur. And we get to see on the SEC filing, it says an assumed closing date of June 15th, 2021 has been used throughout this proxy statement. And a lot of this statement by the proxy really estimates that June or June 15th is one of that deadlines. And with my previous video where I covered through a lot of this, they have actually mentioned something around second quarter being ending, including the frequent asked questions from their employees itself. And before moving on a bit further on, if you'd like to see more contents like this, drop a like to this video and subscribe and notifications on. And if you'd like to join our Discord, it's in the description below. It's totally free, no catch, you get to chat with me all day. So other things here, Lucid says that it has already sold out from the Lucid Air Dream Edition. Now that is definitely bullish because if you do recall, a lot of people have complained about them using millions or sale values rather than the number of units. And if they've actually sold out from the Lucid Air, that is quite something. It increases this kind of demand in terms of Lucid Air. And if you think about it, demand and supply is very important. There's a reason why stuff like NFTs sell for millions of dollars and Supreme stuff are limited. It's not that they're actually limited, but it's that they sold out, and that brings in a lot of interest into the product. And before going on towards technical analysis, two things I want to talk about. Institutional buyers. They remain bullish, they remain adding, but of course a lot of this money has already been raised before even we knew about the official Lucid Air and CCIV merger, although we knew about the rumors and speculated about it before. But a big part of this one here that I'm really confused is almost a 10% short interest onto this one. Why would you be in the right mind to short an EV SPAC? Now, there's a lot of speculations, and yes, SPACs usually drop after they merge, but I have a good plan for this one, and you have to watch technical analysis for it. Now, on a technical analysis point of view, I'm only going to pinpoint a couple of things because the market has slid a little, and this one definitely did not. Well, it held its own later on in the week, but when the wave comes in, everything gets hit. So on here, on a one-day perspective, we're actually looking like it's attempting a positive reversal on the MACD. That's bullish. It's currently oversold, and if you were to take a quick look in terms of the momentum, it's almost around zero. It's around negative 168, so that's forgivable. But the next thing that we want to look at is the moving averages. And the moving averages we see above 30 bucks, things get really, really bullish. And we need to definitely look at supports and resistances before looking then. Moving average band is sitting 2085 or 2855 in the top, 2595 in the middle, and 2336 in the bottom. 3104 and 2087 is the Bollinger Band's range, and so you can expect as it touches the bottom of the Bollinger Band, it's a lot easier for it to bounce back up towards the 31. Now, in terms of stochastic fast and stochastic slow, this is actually following the entire market trend, so ignore it, but it definitely tells you be careful of the next support slash previous resistance. So this support that we're actually sitting at currently is 2265. We actually haven't broken this one yet, and that's actually a bullish thing because you're actually sitting at a very comfortable level off a block. And we're going to go through the other supports in norms, the normal norms, but currently the next resistances are 3071, 3723, 4375, 5303, and 6484. And if we were to go ahead with a price line action, we see a significant support, a very, very strong support, sitting at the 2199. Following that, we're looking at 2074. Following that, we're looking at 1824, 1699, and then sitting at 1494. Significant resistances, there's a few. For instance, the 2440, and then above there, you're looking at 2743. Above there, you're looking at 3127, and then you're looking at 3493, and then jumping up to 4422, and then jumping up to around the 5261 or $50. It comes to the question to Ed, what do you think about this one? Well, this definitely actually does look like a bearish point. It looks like heads and shoulder, which is a bearish point. But theoretically, how lower can it get? I think that the utmost ceiling that we can even think about is probably $15 for one reason. That's what a lot of institutions have bought it in. And this is definitely not a normal SPAC because usually it's $10 for the sponsoring. It's actually $15 for a lot of these institutions. And so consider that. Now, there's a lot of backing, there's a lot of future for this company as it seems, and so things are looking a bit bullish on this one compared to something like Fisker. Although we need to think about the market cap versus price point. A lot of people think about price points and not market cap. This is put into consideration, and so it definitely will be a little bit more expensive in price compared to this year in terms of price over sales because it's pre-sales, pre-revenue, but a lot of these companies are also that way. And if I was to invest into this one, definitely between 15 and 25, there would be my entry because if you were to keep it for a longer term, give it 5 years, leave it for retirement, and hope for the best. You know, a lot of people didn't regret that with Tesla. And I'm not here just to compare it with Tesla, of course, we're in a very crucial time in the market, so you need to be very careful when you're trading this one. But I see a bounce above the $20 and perhaps back to the 33. Hopefully this wasn't actually a bull trap. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.